Good morning, traders. It is Friday, the 23rd of September, 2016. It's 8 a.m. Chicago time, 9 a.m. Eastern. Happy Friday. You made it through another week. This is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to dive right into what we did yesterday. But first, I want to talk about the market posture. The capital is being allocated towards safety this morning, somewhat not aggressively. Currently, the U.S. bond, the U.S. Treasury bond, is leading the pack that I watch, with being up 35 basis points, followed by the U.S. Treasury 10-year Treasury note up 17 basis points, the euro 11 basis points, Japanese yen up 4 basis points, and the U.S. dollar up 8 basis points. So not that big a push. The loser this morning is the British pound, down almost 1%, or currently down 1%, trading $1.2960, followed by the Euro Stocks, DAX, crude oil. Crude oil off by 10 cents. And then the December gold is following that. And then the equity indices, Dow, NASDAQ, and the S&P are almost unchanged, just slightly down, with the Russell being just above break even on yesterday's close. So overall, the market's in a mixed to downward sentiment this morning, and that's how things are shaping up. Didn't see anything significant to drive our market this morning. Of course, you probably heard the news about Facebook having inflated their video viewership by, I think, 60% or something. That stock is down about 2.5%. And then the numbers that came out this morning, you can check those out yourself. The key element from the session this morning has been talk of the OPEC meeting currently taking place ahead of the Algiers meeting next week. Saudi Arabia is pushing to reduce output if Iran agrees to freeze production at current levels. So if Iran freezes its production, then Saudi Arabia will likely cut as well. And of course, the crude oil prices have already responded to that. I think that's kind of coming out to the public now, but it was known since yesterday. So that's how things are shaping up. As far as what we're looking at for today, for the rest of the day, we're getting U.S. manufacturing PMI for September at 8:45 Central, 9:45 Eastern, expecting 52.0. And then we are left with the Baker Hughes rig count at noon Central. That's has not been a consequential number. There's no estimate. As far as speakers, we're getting ECB's Weidemann, who is a known hawk, speaks at a German-French finance event in Berlin at 9 Central, 10 Eastern. So you want to pay attention to that if you're trading products like the Euro, Bund, and so on. And then at 11 Central, noon Eastern, we get Fed speakers Harker, Mester, and Lockhart, all speaking at the same time. And then at 11:30 Central, 12:30 Eastern, we get Fed speaker Kaplan also speaking. So that might cause some turbulence there, but who knows? Let's take a look at yesterday and what was expected. Where are you yesterday? Here we go. Yesterday, the expectation, having come into the session with a gap up, the market was trading at 2165.75 or so during the time of the trader bite. The expectation yesterday was for a test higher, for the market to take out the overnight high. It was pushing against the overnight high into the open to take out the overnight high, test higher towards what we discussed, the point of control above at 2072.75, and potentially push to 2174. And then the expectation is it would rotate into the gap zone that we had below us, with at least a test of 2163.50 which is the mid of the gap zone left behind from the 9th of September, the big gap down and drop a couple of Fridays ago. And that's the main trading idea. The secondary idea was for, again, to take out the overnight high, push through the gap zone, base against the prior day's high, and then create and then have a consolidation before we get our push up into the 2174 higher, into the close. That did not happen. The tertiary, or the third um, uh, trade idea for the day, is a test higher, find the sellers, push through the gap zone, and then push into the prior day's range all the way down to 2140, 46 or so. That was the expectation if buyers finally find their sellers on this push up. So the idea that worked was the market pretty much did hypo 1, and we'll look at that here. If we look at how the market traded, this is a 4-tick Renko instead of the 2-tick. You can see how compressed it is. Very little movement. Let's switch back to 2. Very little movement yesterday as far as range, so I didn't have that many bars. But we had an open auction out of range. We opened right at 2167.50, so slightly higher than where we were during the trader bite. The trader bite, we're down here at 65.75, 64, 65, and it pushed through the overnight high at 69.50, and then it tested 2172.75 to the tick. This 2172.75, in case you forgot, was the big point of control for the last balance range. See this black line right here and black line right there? These are the highest, these are the most traded prices from July through the beginning of September before the drop on the 9th. That is the most traded price we've had for the last couple of months or so, 2.5 months. And what yesterday did is it tested it to the tick and found its sellers on a first test. And I did talk about that on a first test. That point of control is likely to see resistance, and that's what we got, 2172.75, and a quick rotation down. So that's what happened there early on. 2172.75, the MC point of control on the dot, rotates all the way down to the IB low, consolidates, finally breaks through, and then goes to the other side, tests the IB high, through the low again. So again, this is a neutral day, and it keeps playing that again and again. And then zigzag again, go all the way through, pull back, zigzag. It was a very, very, very open auction yesterday. Not easy to trade. There wasn't very much there to indicate what the bias was, because the market essentially tested key areas but did not really have a bias. On the downside, remember the first target below was the gap zone mid, which was 63.50, and the market got to 64.25, missing it by 3 ticks. The gap zone remains on the chart until it gets tested through, and it didn't. So having missed the lower target by 3 ticks, having hit the upper target on the dot, and then finishing in the middle of a neutral day on a very Gaussian, really fairly stocky, big beer belly type profile, tells me that the market is in a pretty tight consolidation, winding up pretty strong, and it's winding up on top of, let's clean this up here, shift this over, and if you look at the profile on the right, the composite on the right, which represents all volume going back to October 10th, 2013, since the last major swing, you can see why it's consolidating. It is essentially building on this same consolidation zone. And in a minute, I'm going to go over the weekly and the monthly to show you that the sellers are very weak. If you're short, as I said yesterday, if you're short, you'll want to hedge those short futures with options, or reduce the position. Our test to the low side on a long time frame basis has been pretty solid, and we're back in the upper distribution. The next rotation up is most probably going to be higher to new highs, okay, coming into the holiday season here in a couple months. So this is how things shaped up yesterday. Very, very tight market yesterday, but balance leads to imbalance, and in the overnight session simply led to more balance. If you look at the overnight session, here's where we were yesterday. We finished inside of the initial balance from yesterday, the IB, and then we opened sideways. We traded sideways through the Asian session, and then Europe opened here, tested higher, and then tested down, and has been against the low with the point of control near lows. The expectation is that this low is likely to go this morning. And we can see the stance in as far as capital allocation this morning to more safety. This is likely to drive us down a little more into the gap zone. So real quick though, just to keep an eye and a grip on the big picture, this is your weekly profile. And as you can see here, we gap down. This is the ninth here. We gap down, and then over the next few days, the 9th, the 12th had a huge rally up the gold day, and then over the next few days, we essentially traded. You can see the purple is Tuesday, Wednesday, Thursday, Friday, and so on. We consolidated down here in the 21-28 area. We left behind this very important consolidation up top that we've had for the last month or so, and we have gapped down through this zone. And what we did this week, from the start of the week, is we tested higher, and we basically moved that. We tested the point of control, as you can see here on Monday, tested that point of control the prior week by a couple ticks, and then stayed above. And remember, all week I've been talking about how the base that was formed in the profile it creates this strong foundation for buyers to kind of catapult from higher, and that's exactly what's happened here. Not that I want to say that I'm right, because I'm not always right. But what's happened here is the market moved from balance right up here, tons and tons and tons of boring old balance, shifted down on the 9th, tested up on the 12th, and then essentially spent the next week building this balance below and shifting this balance higher and higher, and then yesterday popping back up. Okay, and note the gap zone is still open here, so we're gapping through this really important low volume node area. So if I put a line through here, if I could draw a straight line, you could see that this area here has been hopscotched for quite some time. But essentially what the market has done is it's pushed back into the upper bounce. It's likely to test lower, and then once it tests lower and it pushes through yesterday's range, the range put in yesterday, which was the balance day, then you're likely to have the energy to push through to new all-time highs in the S&Ps over the next week or two. That's how things are shaping up. We can see this again on the monthly to get a better picture. You can see what's happened on the monthly. So here's a zoomed out view. There's July. There's August. August, very compressed, very consolidated, lots and lots and lots of trading in a very, very tight range. There's that 2172.75 area that we tested yesterday. And you could see that September, we pushed down, we built this profile down below, and then we tested and have moved back up to the upper distribution. So on a monthly candle, this looks like open, move down, a nice thin candlestick, and now we're up and on the upper end of the range. This essentially on a higher time frame is looking like and acting like an excess low. It's done a pretty substantial test into the July range and has found a base and come all the way back to the August balance, this essentially portends on a higher time frame. This essentially is saying we are rejecting these lower prices. We're likely to move up from here. The path of least resistance right now, what is likely to feed this is new all-time highs. Okay, so just bear that in mind if you're a perma bear and are fighting this market. It's already had its test lower, and it has failed to maintain lower prices. So all those people who are going to pop in here and start talking about how doomsday is coming and it's going to come to an end, and it may come to an end, and it may crash, and we may go back to the ES trading at 666 again. Um, but in the meantime, we're gonna see if we can make money on a daily basis until it does that. I don't really care if the market. I prefer that the market sell off because of the higher volatility and range. But really, as long as it moves on a daily basis, that's all I care about. I'm not here to invest. I'm here to trade. So, seeing as where we are on the lower end of yesterday's range, below the point of control. The overnight high is, notice the overnight high is below yesterday's point of control as well. This is showing a lot of weakness. The expectation this morning is open auction out of range, a test into yesterday's value low from yesterday is around 67, 68, and then I'm looking for it to test down into the down and into this gap zone. That would be your hypo one. I'm expecting fairly tight range and fairly compressed trading this morning. Another pretty tight little profile, bulky fat little profile again this morning. That's what I'm looking for. On the secondary hypothesis is a little more exciting. Open, test lower early to follow on what it did during the European session. Consolidate at the gap zone mid, and then look for a base, and then push back into the prior day's range, pull back, and then get back into the point of control, and then consolidate from there. This is a very likely scenario given where we are, given the fact that we have a gap zone below us and a pretty consolidated profile yesterday with the MC point of control above acting as a magnet. This is the most likely scenario. Once we get into the prior day's range, there will be a lot to pull to attract participation at higher prices. And that's the expectation. But in the nature of the auction, the primary hypothesis is for responsive test and then rotate down as it continues to test this gap zone. But as any indication that it's going back into the prior day's range will have me looking at this high volume node as the magnet up above, and that's what I would be looking to trade for once it pushes in. Okay, the value area from yesterday is very tight. Very tight. So you can see it's 67.75 to 71.25, 3.5 points. Very easy to cross. The entire range was pretty low yesterday, just about 8 points, and it's easy to cross that. We have a lot of energy. Yesterday we had a good amount of volume, 1.3 million contracts, which is slightly higher than what we would consider to be normal. The rollover and expiration effects are behind us, and so there is interest. There was a lot of position building. Based on that information, we can conclude that there's a lot of position building, or likely a lot of position building within this profile today. Consolidations, compression lead to breakouts, lead to imbalance, and that's what I'm looking for today. Okay, it's Friday. I don't need to remind you, as I always do. It's Friday. Pick your spots. Don't go into the weekend with a big loss. Don't let your emotions get the best of you. Good luck, and I'll catch you next week. Take care.